Alright, so we lost the order block here on Euro after the sweep on the bodies of the candles we were talking about earlier. We're looking at Canadian dollar for a response to the crude oil inventory number that's due out here in about 11 minutes. Okay, and I just want to go real quick over to hang on one second. All right, this is the economic calendar for today. And along the theme that we've been, well, focusing on specifically how to deal with conditions, like how do we set the stage for when we should be trading. And I know there's a lot of folks, Ken, I appreciate your enthusiasm, but you're not the only one. I get a lot of that same thing in direct message and on email. The first couple months while we're doing this, I'm giving you a mindset first, okay? Obviously, I'm in here showing you that it's repeating, it's things that can be seen on a daily basis. I can't transfer this information as a direct download so everyone can know right away how to do it. So I've taught a lot of people over the last 2 decades, and trust me, if you just allow me to do it, you'll learn exactly what you're paying for. So just be a little bit more patient, and I promise you, you'll get it. But there has to be framework behind what it is that sets up the trades. It just can't be, hey, here, look, here's I'm buying here, I'm selling here. I want you to understand what it is that we're doing, because we will be doing drills with foresight in advance, telling you, okay, look, we're going to be, like for instance, I'm explaining today, we've talked about the importance of knowing how many high impact news events are going on for a particular session and for a particular currency. How many high impact events do we have for today? Looking at the calendar we have in front of us right now, it's a lot. It's a lot. So it's a very busy day. So looking at what we have, there's a lot of things going on with Euro. Okay, we have the minimum bid rate that took place earlier this morning. Then we had an ECB press conference. Well, is that a precise time, the conference? No, you don't know what's going to be talked about, what's going to be dropped as far as a bombshell, quote unquote, if you want to call it that. And then you have the dollar index with its unemployment claims. Then you have the crude oil inventories later on, which we're about to see here. So my question to you is, in all that, which is the only currency today that has clarity that you focus on? Canadian dollar. Good. Blind Frog's the only one. No, Stephen Bitbot got it. All right, so the reason why CAD is because look what we have. We have distinctive medium impact. These are medium impact events, okay, coupled and against the dollar. So we know there's going to be very distinct movement with the dollar CAD. And we also have another impact that's medium later on in the day with the Canadian dollar. So they're probably going to want to price Canadian dollar before this event, on the heels of this high impact news event for crude oil. And crude oil is directly related to Canadian dollar because it's a commodity for their country. So with Euro, whenever there's a speech, whether there's a conference, whenever there's a meeting, and it has a high impact to it, you're going to get a lot of whipsaw. So either you're going to scalp it, take one level, know what it is that you're going to be taking a trade on. When it hits it, get out, move to the sidelines. Otherwise, it's not as pure as getting in at the London, hold for London close. Usually you don't get those types of scenarios. You get a lot of whipsawing, okay? And to avoid those types of conditions, it's why it's important that you learn what I'm teaching here in the first month and the second month, because you will avoid all of the problems of trying to push it too hard in a condition that's not really set up to give you real clean runs higher or lower. Also, it'll give you the clarity of knowing when you have these conditions, you can move to a scalping mentality. I'm not trying to teach scalping as a forced perspective on the marketplace, but to make you a universal trader, you can go in and scalp in these environments and do very well. And you'll know exactly what you're looking for. You're not going to try to bleed the turnip. Okay, you're just going to take a little bit out, move to the sidelines, and just take the next setup if you get it. Nothing wrong with that type of trading, but many times folks that scalp will go all over the place in a day like this and not have any real context of what the condition of the market is. So the market profile will beat them up. They might get one or two winning trades and they push their luck one, two, three more times and they end up losing what they made, and then they go into drawdown. And that's avoidable if you just relax. But it first starts with obviously knowing what condition and market profile we're in. And you begin to get those clues by looking at how much information is coming out in that day. There's a lot of impact. It's spread across 2 sessions. Okay, well, not necessarily 2 sessions. It's the entire New York sessions. There's a landmine full of stuff here. But we have built-in advantage with the Canadian dollar because it has it's medium impact news for both the 12:20 and the 8:30 time frame for Canadian dollar, but it's coupled against a high impact unemployment claim. Then we have a high impact crude inventory. So it makes it very easy just to focus on one currency. Like I said earlier in the previous session, it doesn't make it impossible to trade the other currencies. It just makes it a little more difficult if you don't have experience knowing what to expect in terms of the volatility. So it helps you filter out what trading pair you should be looking at. And hopefully I've answered a lot of questions with the 3 presentations today with when do I know which currency to trade, between the fiber and the cable. Well, you learned a secret to it today by having an understanding where the high impact and medium impact news events are going to be. And preferably, if it's only one event that's high impact for that currency in that kill zone, London or New York, it's a loaded deal. All right, so let's go over to charts. Okay. Now, admittedly, this has already fulfilled the objective I would have had for today. It might come up here, spike it one more time on the crude oil inventory numbers. But I want you to see the importance of knowing what the volatility will do for it. It's already closed in the objective that we had for today. I wouldn't be surprised if we go one more time through that level. It's really fun watching this stuff unfold daily, isn't it? Especially if it's a new trader, you're probably loving it. Andreas, it's annoying. What are you talking about? All right, so we're a couple minutes away from the release. If we get a spike down initially, watch this levels to the middle of that down candle. Watch that one, because we have stops resting right below this low here. So they could come down, take the stops, hit the order block, and then one more pass through. If we lose this order block, it's going to clear out these lows. Now, after we go through weeks of given context of when the market should be poised to move higher or lower and aiming for specific price levels, the teachings this month will help you get that context in mind, so that way you'll understand when we go into month 2 why I'm referring to why the market should reach for this level or below where it is now. In other words, what we did with the Australian dollar and what we did with the Canadian dollar today. Um, that is the basis of knowing, number one, when you're going to take a trade and which direction. Because once you know where that's most likely going to reach for, okay, having an idea of where the market may want to draw to, where the liquidity is most likely to be tagged, higher or lower relative to the current market price, that gives you all the things that you're missing right now. And that's why I'm telling you the entries are easy. That stuff is the easy part. The hard part is knowing where the market wants to go. And everybody wants to jump to give me the buy, give me the sell signal, give me the entry, give me the, just get me in there, and then I'll start making money. It doesn't work like that. Okay, so we have an order block, tag that. And see how sloppy that is? That's what I'm talking about. You want to avoid this type of trading. Now contrast that with if you just would have simply been looking for a run above the buys of the candles for a sweep on stops, knowing that it's going to be a condition like we've described here. Zoom out a little bit. Actually, let's go back to CAD. There it is, gapping down. Watch the order block here. Now again, look how clean these levels are over here. Very clean. And they have another little level up here where stops would be residing. So it only went just above that line that I had drawn in the second session this morning before we took a break and came back just now. We went just one pip above it, and then we retraced. So to me, that's still a little too clean. So they may be coming back down here just to find some discount and then run it one more time higher. If we lose the order block in here, that will indicate that we're probably going to have to run below these lows here. And then later today, by 3:30, you'll have all the videos that were recorded today, and then there'll be a recap video where I'll explain all the reasons I was referencing specific levels for the CAD and the Euro. Dollars found support, bullish order block. Just fell short of the bearish order block in here. I would have rather seen it come up here, take these little highs out, and then if it came back down here, it might be indicating it wants to go lower. But here, we're back in equilibrium, which is the range between this high and this low. So we are not in any state of expansion. So we move back to a position of consolidation, which is the reason why you're seeing US CAD hold inside of its range. Now you see this little gap right in here between the high of this candle we're trading now and the previous candle's close. See that small little gap right there? This is porous price action. That little segment of price action right in there. When we look at trading liquidity voids, that is a very good example of what a liquidity void is. Price will come up there and try to close in that gap. When you see these quick runs like this little pocket or gap inside, you don't see that because the range moves so quick. But inside of this entire range like this, or this range down here, it creates these little pockets. And that's why the price has a strong tendency to come back up and close that in to give more efficiency to price delivery. A little bit ago. You should be hearing me, Fred.